Welcome to the Deep Dive, your ultimate shortcut to being well-informed.
Glad to be here.
Today, we're doing something a bit different. We're taking a deep dive into an earnings call.
Right, the Q2 2025 call from day one Biopharmaceuticals.
Exactly. And it felt like a really pivotal moment for them. It marks, what, 1 full year since OJEMDA got approved?
Yeah, their lead product. And for us, at Talk Tickers, it's just fascinating watching a company make that switch from pure R&D.
It's a full commercial operation.
It really is. And I think what we're trying to unpack today is, well, how successful is that shift? Because the market's first take, after the call, it was pretty muted, wouldn't you say? Kind of cautious.
Yeah, definitely cautious, even though there were some, genuinely positive operational things in there.
Which sets up this tension, right, between management sounding quite confident and maybe investors wanting a bit more, especially on that growth curve.
Absolutely. So let's kick off with the headline numbers. Day one reported GAAP EPS, that's earnings per share, of -$0.09. Now, that actually beat the consensus estimate.
Right. Consensus was looking for -$0.35. So a solid 6-cent beat there.
So, on the bottom line, better than expected.
Which is important, yeah. That EPS beat, it does point towards, good financial discipline, managing expenses better than the street thought.
But there's always a but, right?
Well, the top line, the revenue story, was a bit different. Total GAAP revenue landed at $33.9 million.
Okay.
And that, unfortunately, missed the consensus target of $35.9 million.
So about 5.6% short. Not huge, but a miss is a miss.
Exactly. And that seemed to be what the market initially latched onto, that slight miss on the top line.
So, okay, EPS beat, revenue miss. But, and this is where it gets interesting, why we need to dig in, that year-over-year revenue growth was huge. 314% growth from $8.2 million last year.
Massive jump. And that's almost entirely down to OJEMDA performing strongly.
That's really the core of it, isn't it, OJEMDA?
It is. Net product revenue for OJEMDA itself was $33.6 million. That's a healthy 10% increase just from the previous quarter, Q1. And year over year, a massive 310% surge.
Wow. And prescriptions crossed 1,000 for the first time.
Yeah, over 1,000 scripts. That's up 15% quarter over quarter. So, these are really strong signals that the drug is getting traction out there commercially.
It definitely paints a picture of momentum. The CEO even used that phrase, right? Strong momentum.
He did. And he really hammered home how OJEMDA has fundamentally changed day one into a commercial stage company. That's a huge identity shift.
A really big deal for them.
And if you look at the bigger picture, the last 12 months, cumulative net revenue for OJEMDA, it hit $113.1 million. Which, interestingly, was actually better than their own initial expectations.
Well, that is interesting. So maybe they were a bit conservative starting out.
Possibly. Or just really solid, consistent, performance-beating internal models. Either way, it's a good sign.
So it's not just the headline revenue jump. We need to understand the mechanics underneath. What's actually driving it? Is it just more doctors trying it out? Or?
Yeah, good question. They broke it down into two key things. First, breadth. So just getting more prescribing accounts, more doctors starting to use OJEMDA.
Right, expanding the user base.
Exactly. And second, depth, which means the doctors who are using it are putting more patients on it.
Oh, okay.
They said over 60% of their accounts have now started multiple patients. That suggests that it's not just a one-off trial for these doctors.
It's becoming more embedded in how they treat patients. Growing confidence.
Precisely. It signals that physicians are getting comfortable with it, seeing results, and integrating it more deeply.
Okay, so the doctors are prescribing. But what about getting the drug to the patient? Payer coverage can sometimes be a nightmare, especially for new specialty drugs.
Absolutely. Critical point. And here they seem to be doing quite well. They reported strong payer coverage. Over 95% of patients are getting paid for.
That's very high.
It is. And around 90% get approval on the very first submission.
Wow. So less hassle for doctors and patients?
Exactly. It makes access much smoother, which is huge, especially in pediatric oncology. Yeah. You don't want delays or admin burdens getting in the way. Smooth access really helps keep patients on therapy.
Makes sense. Now, they also, for the first time, gave full-year guidance for OJEMDA, right?
They did. First time issuing full-year net product revenue guidance. They're projecting between $140 million and $150 million for the full fiscal year 2025.
Okay, $140 to $150 million. And the middle of that range That implies about 150% growth year over year.
That's right. Pretty significant growth baked into their first official forecast.
And what do they say is underpinning that forecast?
Management pointed to what they see as, strong and persistent demand, that deepening prescriber adoption we just talked about, the breadth and depth, and that consistent payer coverage. Those are the pillars.
But they must have highlighted some uncertainties, right? Guidance always has variables.
Oh, definitely. They were very clear. The range, $140 to $150 million, really hinges on two critical things. First, patient persistence. How long do patients actually stay on OJEMDA?
Right, the durability of treatment.
Exactly. And second, the pace of new patient starts. How quickly are new patients coming onto the therapy? Those are the big levers, the things they'll be watching closely.
Got it. So persistence and new starts, those are key to watch. What about other sort of financial plumbing? Gross to net discounts, things like that.
Yeah, the nuts and bolts. Gross to net, that's all the discounts and rebates off the list price. They expect that to stay stable in the 12% to 15% range.
Okay, pretty standard range.
Yeah, indicates predictability there. And channel inventory, the stock held by distributors, they're keeping that lean, around 2 to 4 weeks. Good for cash flow.
Okay. And looking at the overall expense side, were they keeping things tight? You mentioned financial discipline earlier.
We definitely saw signs of that. Operating expenses, particularly R&D, research and development, that dropped significantly.
How much?
Down to $36.1 million in the quarter, compared to $92.1 million the year before. That's a huge decrease.
Wow, yeah. Reflecting the shift now that OJEMDA is approved.
Exactly. The heavy lifting on OJEMDA's core development is done for now. SG&A, selling, general, and admin costs were also down slightly year over year at $29 million. So yeah, it looks like they're managing spending carefully as they scale up the commercial side.
That big R&D drop is telling, isn't it? It really signals where their focus is shifting.
It does. R&D is still vital, of course, for the pipeline, but this spending shift shows that deliberate transition. Resources are freed up to push OJEMDA commercially and, importantly, to move their next-gen assets forward efficiently.
And they seem to have the resources to do that. What was the cash position at the end of Q2?
Pretty strong. They ended the quarter with $453.1 million in cash equivalents, and short-term investments.
That's a healthy cushion.
It really is, especially now, in this tougher biotech funding environment. It gives them ample liquidity, a multi-year runway.
Reduces that immediate financing pressure.
Completely. Gives them flexibility, resilience. It's a strategic asset in itself right now.
Okay, so solid financial footing. Let's pivot then to the strategy and the pipeline. How are they planning to build on OJEMDA's success?
Well, the CEO's message was pretty consistent. 3 things. Accelerate OJEMDA revenue, advance the pipeline, and maintain that financial discipline.
Okay.
And we saw actions backing that up. They did some portfolio pruning. They cut ties on their Sprint Bioscience VRK1 collaboration.
Focusing resources.
Looks like it. Concentrating on their core, potentially higher impact assets. And they also made a key hire.
Oh, yeah.
Michael Vasconcelles, MD. He came over from ImmunoGen, now head of R&D. Brings a lot of oncology development experience. Seems like a strong addition to the leadership team.
Good move. Okay, so focusing the strategy. But what about OJEMDA itself? You mentioned persistence earlier.
Yeah.
What's next for data there? That FIREFLY-1 data seems crucial.
It really is. And the next big update is the 3-year follow-up data from FIREFLY-1. That's planned for Q4 this year, 2025.
Okay, end of the year. Why is that 3-year data point so important?
Well, it builds directly on the 2-year data they presented back in June at ASCO. Management really stressed how positive that 2-year data was. It showed, robust efficacy, good rash management, but also this growth velocity recovery in the kids.
And growth velocity recovery, that's about kids getting back on their normal growth track.
Exactly. Which is just huge in pediatric low-grade glioma. It means the treatment isn't just controlling the tumor, it's allowing the child to develop more normally. That's a powerful clinical signal for doctors, for parents.
Absolutely. So the 2-year data already boosted confidence, drove new patient starts.
Right. And physicians are apparently intending to keep patients on therapy for up to 2 years where possible.
Oh, okay.
So this upcoming 3-year data, it's going to give much deeper insights into what happens after that 2-year mark. Post-treatment outcomes, long-term persistence, and interestingly, the median duration of treatment, they haven't even reached it yet since launch.
Meaning more than half the patients started since launch are still on the drug.
That's what it implies. A significant number are staying on for extended periods, which speaks volumes about durability and tolerability.
That's really compelling for long-term value.
Yeah.
What else is happening with OJEMDA development?
Well, the FIREFLY-2 trial, that's their big Phase 3 confirmatory study in the first-line setting. Enrollment is still on track. They expect to complete enrollment in the first half of 2026.
Crucial for potentially expanding the label, moving earlier in treatment.
Exactly. And internationally, the EMA in Europe accepted their filing back in Q1. So potential European approval could come mid-2026 through their partner Ipsen. That opens up a whole new market.
Big opportunity there. Okay, so lots happening with OJEMDA. What about beyond that? They have Day301 moving forward.
Yes, Day301, that's their PTK7-targeted ADC.
ADC, antibody drug conjugate. Remind us quickly what that is.
Think of it like a smart bomb for cancer. It uses an antibody to find a specific target on cancer cells, PTK7 in this case, and deliver a potent chemo drug right to those cells.
Minimizing damage to healthy tissue.
That's the goal. More targeted, hopefully fewer side effects. It's currently in a Phase 1 dose escalation trial. Management said investigators are engaged. Progress is as expected for this type of drug. It's their next-gen asset, tackling a tough target and diversifying beyond just the pediatric glioma space.
Okay, so an innovative approach moving into new areas. Let's circle back to the market reaction then. We said it was initially cautious, maybe a bit skeptical.
Yeah, the stock took a pretty significant hit the day after the call. It really highlighted how sensitive the market is right now to that revenue growth story for day one.
Like what have you done for me lately and what will you do next quarter kind of reaction.
Kind of felt like that, a real show me response. It seemed like investors were hungry for confirmation of accelerating growth, maybe more than the initial guidance suggested.
So management sounds positive on execution. The pipeline looks promising. But investors honed right in on that FY25 guidance, wondering if it was ambitious enough or if sequential growth might slow.
That seems to be the crux of it. Now, the stock has bounced back quite a bit over the last month or so.
Right.
But that initial sharp drop really underscores how crucial consistent performance validation is going to be. They need to keep hitting or exceeding expectations.
And the competitive landscape isn't static either, right? More options emerging for these BRAF-altered gliomas.
Yeah, exactly. The field is evolving. So continued strong data, especially that long-term FIREFLY data and potential label expansions, will be key for OJEMDA to really solidify its place.
Makes sense. Okay, let's put on our analytical hats for a moment. Think like hedge fund analysts, maybe.
All right. Disclaimer time coming up.
Absolutely. This is not financial advice. But day one's Q2, it was this interesting mix, wasn't it? EPS beat, slight revenue miss, but really strong underlying OJEMDA growth, solid cash.
And that sharp market reaction followed by the recovery creates an interesting setup.
So here's a thought, a plausible, maybe aggressive trade idea.
Let's hear it. Again, not advice.
It's not advice, but consider maybe a long position in day one, ticker day, perhaps through options like a long call spread, looking out towards maybe Q4 2025 or Q1 2026 expiry.
Okay, what's the rationale behind that specific play?
Well, the thinking is, if you believe management can execute that initial market skepticism about the growth implied by guidance, that might offer a decent entry point.
Betting against the initial doubt.
Kind of. You've got these strong underlying KPIs, the prescriber breadth, the depth, those are fundamentals. And that huge cash pile, over $450 million, takes away immediate financing worries, which is huge in biotech right now.
And the catalysts are potentially significant.
Exactly. That FIREFLY-1 3-year data in Q4, that could be a major inflection point if it confirms long-term durability. And continued progress with Day301 adds pipeline optionality.
So if that data lands well, it could completely reframe the FY25 guidance, turn it from a perceived ceiling into more of a baseline.
That's the idea. It's essentially a bet that the market might be underappreciating how sticky OJEMDA could be long-term and the value in their pipeline, buffered by that strong cash position. A bet on continued validation.
Interesting angle. Again, purely hypothetical, not advice.
Definitely not advice.
Yeah.
So wrapping this up, what does it all mean for you listening? Day one, Biopharma. They delivered a Q2 with clear operational wins for OJEMDA.
Yeah, strategic focus seems sharper, portfolio being refined, and they have that solid financial runway.
The market's initial take highlighted that sensitivity around the growth pace, the trajectory. But the underlying story seems to be a company that's actively executing its plan, making that tough transition to commercial.
The big question now really is whether that upcoming FIREFLY-1 data at year-end, plus the ongoing commercial KPIs, will that provide the clear reacceleration, the validation that investors seem eager to see?
That's what we'll be watching. As always, remember, this wasn't financial advice, just our deep dive into the earnings call information. What stands out to you about day one's quarter and their path forward?
Yeah, think about that transition from clinical success to commercial reality. It's rarely a straight line. Day one is definitely a compelling case study to follow. We really encourage you to dig into the details yourself and form your own conclusions.